All right. Well, hello, everyone, and welcome to today's presentation, Busting for Impaired Disability Insurance Myths. I'm your host, Seth Groff, and I'm joined today with disability insurance expert, Amy Falconer. Amy, welcome.
Thanks, Seth. Hi, everyone.
What's new in Colorado, Amy?
Nothing much. We have sunny weather, and so we're happy that it's the beginning of spring finally, right? On its way to
Absolutely.
summer.
Absolutely. Well, if you're not familiar with risk insurance and reinsurance, we have a product that is designed for the impaired risk disability market called FlexDI. And this product has, really taken off over the past 12 months. With that still being said, there's still a lot of myths associated with the impaired DI market. And, today I want to, shed some light on, my opinion on these myths and also give you some tips on how to overcome them if your clients bring them up. If you're not familiar with the impaired DI market, a recent Milliman survey actually said that 19% of individual DI policies that were submitted were declined. Okay, 19%. And so if you look at how big the market is, I think there was 270,000 policies issued. This was actually in 2023. It was a good portion of those were probably maybe GSI or some part of it didn't include group. It was individual policies, but still you're probably looking at 25,000 to 30,000 policies that are declined on an annual basis by disability insurance carriers. And if I were to come to you and say, "Hey, I got a market for you," it's going to be people that raised their hand and said, "Hey, I want this product." They need this product because they're statistically more likely to experience a disability than the rest of the market. Is that something that you would be attracted to? And I think most people would say, yes, it is. Yet, some agents and some GAs, some wholesalers are still hesitant to really go all in on the impaired risk DI market. And so, today, again, I want to kind of bust some of these myths or what I call maybe opinions or maybe even excuses as far as when you get objections from your clients in this market. So at the end of the day, I want you to ask yourself a question. Do I believe my healthy clients need that rely on their income to maintain their lifestyle? Do they need disability insurance? Talking about the healthy ones. And I think everyone here would say, yeah, my clients need DI. That's why I talk to them about it. And so they would say yes. And then I say, well, does that need change if they have a health issue? And the answer is, well, they still need it. They probably need it more. And so in some situations, you might have to go the extra step, to get these people insured and get them the coverage that they need. So, again, here's what we're going to take a look at. And, I'm going to give you tips on how to overcome these, misconceptions in the DI cell. The first one, I don't need disability insurance. It's kind of funny. Well, it's not funny, but what happens is, the individual didn't wake up probably saying, "Hey, I need disability insurance," right? They probably the agent or insurance professional reached out to them, you know, educated them on why they need DI insurance. They said, "Yeah, that makes sense. I'll take it." And then all of a sudden they were told they couldn't get it because they have a health issue, right? And so they might be like, "Well, I didn't really think I needed this in the first place. They said I don't want it. I don't need it." Well, they do need it. They need it more than the healthy people, in my opinion. So we'll kind of address how to handle that during the sales process. Another one is disability insurance is complicated. I think as an industry, this is kind of a limiting belief. I don't think disability insurance is complicated, right? I've been, I've sold life insurance and I've sold, major med health insurance, and I can tell you that major med health insurance is way more complicated than disability insurance. And so, it's not complicated. We can, I don't want to say simplify it for the clients, but we can definitely improve the way we communicate to them and also put an emphasis on what is important to them and focus on communicating that. One that I get a lot is DI is too expensive, right? Again, this kind of is even more of an issue in the impaired market space, right? If a carrier is going to take a risk that most carriers won't, the reality is that is probably going to cost a little bit more. And so I'll give you some, pointers on how to tackle that objection. And then finally, underwriting is too hard. And my argument is, hard compared to what, right? I think that you'll find that underwriting associated in the impaired market is a lot of times easier. I'm not saying that it's less thorough, but a lot of times it's a lot easier than the traditional market, because that traditional market is really looking for the best of the best, and so they kind of comb through everything with a fine tooth comb. And the impaired market, we know they're going to have health issues, and so our underwriting, is going to kind of streamline that process and get the policies in force as soon as possible. So let's take a look at these and kind of some tips on how we can address it. So the very first thing I want to start with is just make sure that you understand the impaired risk DI cell and kind of give you tips. Okay. No one goes into a meeting saying, hey, I'm going to sell impaired risk disability insurance, right? It pivots to an impaired risk DI cell as soon as those health issues are exposed. Hopefully, those health issues are exposed early in the conversation, so you can pivot to the right product and educate them on what is going to happen. But in any DI cell, it starts by starting the conversation. And on the next slide, I'm going to give you some tips on how to start the conversation with all your clients, regardless if they're healthy or unhealthy. Just generally saying, start the DI conversation. You need to establish the need for disability insurance. You need to explain the process, what that client is going to have to go through in order to get this plan in place. Reinforce the importance of being truthful. I tell people all the time, underwriting is a lot easier when you're truthful up front. Okay. It's when those underwriters find things on that clean application that just they're like, okay, what else aren't they telling me? And so the more truthful you can be, a lot of times it speeds up the process. Set expectations, right? Let them know that unfortunately, when you uncover that health condition, right, you have to let them know that maybe what was originally discussed is off the table. But if they are truthful with you, you're going to get them the best plan that they're eligible for. And go through it. But they're going to have to answer questions about their health issues. And so, make sure they're comfortable with that. And it's just going to improve the process. And then finally, reestablish the need in every interaction, right? Especially if you go ahead and submit that with the traditional DI carrier just to see if it gets through. It's in underwriting for a month. It gets declined. You come back, you request an impaired risk quote from risk insurance. And, now it's a month later, it's 6 weeks later. Every time you communicate with that individual, you need to reestablish the need for disability insurance. Okay. You don't have to do the whole presentation, but you need to remind them while they're doing it. And also, I'll give you another quick tip is you don't have to submit it with the traditional carrier first. There are going to be situations where the carrier is going to say, no, we're not going to take them, but risk will. And if you can, skip that step in the process, it's just going to improve your chances of placing that policy. I don't have like a silver bullet for starting the disability insurance conversation with the client other than just starting the conversation with the client. But the most successful people that sell a lot of disability insurance, both on their healthy clients and their ones with, a pre-existing health condition, they make DI a part of every presentation, and they know when they're going to bring that up in the presentation. So, whether you give your client agenda or you just map out what your sales conversation is going to be, make sure that you have income protection planning on that agenda so that you bring it up with every client. Okay. And then also have your transition question prepared, right? This works with, again, your healthy clients and your impaired risk clients. And usually this is actually going to happen. This transition is going to happen before you even know that they have a health issue, right? Unless it's something visible that you can see. But the best one that I have is just let your clients know that one of the services you provide with the people that decide to work with you is an income protection plan. And the purpose of this plan is to ensure that if something unexpected happened to you, both disability and, I'm assuming you probably sell life insurance as well. So if, disability or premature death, that there's loved ones lifestyle would not be impacted, right? And so is your income protection plan insurance based or is it asset based? Another great, lead in is when was the last time you reviewed your income protection plan, right? Because you can protect that income both in the event of a premature death and disability. That's going to lead you into the conversation about disability insurance, where the next step is to establish the need. And really, the best way to establish the need for disability insurance is to just make sure they know what their worth is. Okay. Most people look at their worth on a, bi-monthly paycheck, right? They get however many $1,000, every 2 weeks that hits their checking account. And that's what they typically look like. But if you look at what they're worth over, the course of their working years, it's going to be a large number. And, there's a lot of calculators out there that will show the total income. This was just a quick Google. Key Point Credit Union had this calculator. I have no affiliation with them. They have a nice calculator though. It does a great graph. But I entered in, the information. It was a 40-year-old making what was it, 200,000 a year. Assume 3% raise over until age 65, and their estimated earnings between that time is over $10 million. Okay, is that an asset you want to protect? That's establishing the need. And they're going to look at that $10 million number a lot differently than whatever their paycheck is every 2 weeks. And so, that all the best agents that sell a lot of disability insurance, they make sure their client knows what that number is. And we're going to take a small portion of, what they receive on every 2 weeks to ensure that, at least a portion of that 10 million. Because again, Joe's most valuable asset is his ability to earn an income. His family relies on that income for their current and also their future lifestyle. And they probably don't have enough assets to replace 10 million in income. And so are you interested in learning how disability insurance can replace a portion of your earning potential if you're sick, or had an accident and unable to go to work? So the reality is that most people that rely on their income do need disability insurance. You need to go and educate them on why they do. This is both for your healthy clients and your impaired clients. But again, when you get that impaired DI cell, this is even more important because statistically, they're probably more likely to have a disability insurance than that healthy person, because they already have a pre-existing health condition. The next myth that I want to talk about is, impaired DI is complicated, right? Or disability insurance is complicated. I think as an industry, we've made it more complicated than it needs to be. I think there's some people out there that, are trying to provide a service that say, hey, this is complicated, let me handle it for you. The reality is, this is what the client needs to know. Okay. I think that the client needs to know what has to happen to receive the benefit, right? This is the definition of disability. You can find this in the policy language, but it's very important to, let them know what has to happen, right? You're going to hear ONOC definition. We're going to talk about what the definition is on Flex DI, but you'll hear ONOC, NEOC, modified ONOC. Know what that definition is and make sure they understand what it is. How long do I have to wait to receive benefits, right? This is the elimination period, right? Typical, we see a lot of 90-day. I think for long-term disability, that's going to be the most common, if you look at the surveys, it is. How long will I receive benefits? That's going to be the benefit period. And, Flex DI has one of the longest BPs in the industry, which Amy will walk you through on the next slide. How much will I receive each month? That's the monthly benefit amount. And then finally, what else should I know about the policy, right? Are there riders? Are there other benefits, mental nervous built in? Is there, a partial DI? Just anything else that you need to know about the policy, be prepared to explain it. But when explaining all this, make sure you're not just reading the policy language, make sure you know what that means to them. So, Amy, why don't you walk us through some of the nuts and bolts of Flex
Mhm.
DI and why it's important to the client.
All right, and actually, before I do that brief overview on the slide, Seth, I'll give my 2 cents. And I guess in many respects, I'm also busting another myth that's out there, and that myth is that impaired risk clients do not qualify for individual disability insurance. It is true that many proposed insureds are declined by traditional DI carriers on a daily basis due to pre-existing conditions such as cardiovascular disorders, diabetes, cancer, multiple sclerosis, lupus, and I can go on, right? So many agents, after going through that underwriting process and having their clients declined, walk away with the assumption that there's just no coverage available to these clients. And that's just not true. Impaired DI products have been around for a long time, but it's not widely spoken about or presented to clients. And agents who do know about these products, they feel defeated after going through that whole process with a traditional DI carrier and having their clients declined, having to convince their clients to do another round of underwriting and present an option that may bring about more objections. The truth is, clients with pre-existing conditions can qualify for disability coverage in the impaired space. And what makes our Flex DI product even more unique and worth offering is that we do not exclude many of these pre-existing conditions if they are well controlled and stable. So it's a great option to offer those clients who have been told no in the traditional space, and for those clients who want to have their pre-existing conditions covered. So a brief overview of the Flex DI product. Seth, if you can put that slide on the screen.
It should be up on the screen right now.
Oh, some reason I don't see it. It may just be me. But anyway, so the Flex DI product is a guaranteed renewable product to age 67. It's conditionally renewable to age 70. The issue age is 18 to 62. And our maximum monthly benefit on this product is 25,000. Now, that is kind of unheard of in this space. And I will add that that 25,000 is not restricted for any occupation on this product. You'll find in the traditional DI space that typically carriers would restrict benefit amounts to your blue and gray collar occupations. So your farmers, your roofers, and even chiropractors are restricted when it comes to monthly benefits. But with our Flex DI product, we do not restrict that 25,000 for anyone, as long as they obviously financially qualify for it. The benefit periods we have available on this product are 2 years, 3 years, 5 years, 7 years, and 10 years. And I will also add, maybe I'll give you an example. In the traditional DI space, someone who's diagnosed with diabetes, type 1 diabetes, is typically a decline in the traditional space. Someone with type 2 diabetes will get an offer usually. However, that offer will be restricted. Usually it's a 180-day EP and a 2 or a 5-year benefit period. More than likely a 2-year benefit period. But with Flex DI, if someone was diagnosed with diabetes, doesn't matter whether it's type 1 or type 2, as long as it was diagnosed 6 months ago and the client has been compliant with treatment, it's stable, we can offer up to 10 years on the benefit period and a 90-day EP. This product is graded, but it's only graded for illnesses. So sicknesses, it is not graded for injuries. If someone were to become disabled due to a sickness in the first year that they own the policy, they would receive 40% of the monthly benefit. Second year, they get 75%, and from the third year on, it's 100% of the benefit. But again, for injuries, as soon as you satisfy your elimination period, you would receive 100% of that benefit. Elimination periods, or some people know it as waiting periods, is your typical standard EPs, 30 days, 60, 180, 365, and we even have a 730-day elimination period. This product is available in 44 states. The states that we do not have it available in are California, Montana, North Dakota, New York, and South Dakota. And for those states, we still use our old legacy product that can offer up to 15,000 per month of benefit. And actually, Florida has its own product as well, where we can offer up to 8,000 per month of benefit. Um, some of the features built into the policy, and I'll actually start with the own occupation extension, which is a rider that can be added at an additional premium. I know many of us on this call are very aware of the various definitions of disability out there. So we have any occupation, right? And that means your policy will only pay if you cannot work in any occupation that you are suited for by training, education, or experience. Then we have modified own occupation definitions, which means that the policy will only pay if you cannot work in your occupation or specialty and you are not working in any other capacity. And then, of course, we have the own occupation definition, which is the strongest, which means that the policy will pay if you cannot work in your regular OC or your specialty, even if you can work in another occupation that is totally unrelated. So with Flex DI, our base contract is a 2-year own occupation definition and thereafter any occupation for the rest of the benefit period. However, by adding that own occupation extension rider, you'll get that own occupation definition for the full benefit period. We also have presumptive built into the contract, just like all other DI carriers have. We have a partial disability rider built in. And again, that partial disability, unlike your residual rider that pays out as soon as you satisfy the elimination period, this partial will kick in once you are recovering from a total disability. And even if that total disability was only 1 or 2 days, maybe the client went on claim and within, a couple of days or a week, they recover, they go back to work, but they're not at their full capacity, that partial rider kicks in and pays 50% of the monthly benefit up to 13 months per disability period. And then we also have a mental, nervous, and substance abuse disorder feature built in, and that pays 50% of the max benefit up to 13 months per the lifetime of this policy. And one important factor is that our benefits reset per disabling event. All right, Seth, I'll hand it back over to you.
Yeah, a couple things that really stood out to me, and make sure you reinforce this with the client. First of all, the guaranteed renewable to age 67, right? That means that they get this policy in force and they don't have to requalify even if their health gets worse, right? So that's huge. Also, that own occupation definition, 2 years built in, able to extend it all the way out to a 10-year BP, which is the longest in the impaired risk market. That's huge as well. And then also, that the fact that Amy mentioned that, in some instances of the mild diabetes, mild cancer, mild heart, we're able to issue these without the exclusion on that condition. That's huge as well. And so, those are the things that you need to point out to the client and educate them on if it's applicable, right? The no exclusion isn't always applicable. There are conditions that we would exclude. But if you get that in place, it's huge to reinforce that with the client because there's a lot of it's just having that condition covered is just going to be huge. So impaired DI costs too much. And, this is one I hear, right, a lot. I hear it a lot. I work with, GAs and wholesalers and, they're, doing a service for the agent. And so it's something that you have to be able to address, but it's probably one of the biggest misconceptions or biggest excuses, in my opinion, that I hear. But if you're working with a client and they say it's too expensive and it's happened, the last 10 people that you've presented to, the very first thing to do is to take a step back and determine how you got there, right? Because anytime that somebody says it's too expensive, what they're saying is they do not see the value in your offer. Okay. And so you did not do a good job of establishing the need for disability insurance. You did not, establish the value in the solution that you presented. And so you need to look at how you got there. And one of the most common mistakes that I see a lot of agents make, and I'll take some blame on it as well, because carriers we're kind of guilty of of doing this, but they show the premium compared to the monthly benefit. Okay, so it's going to say, and sometimes they'll even show you the annual premium compared to the monthly benefit, which is even worse. But they're saying, hey, for $300 a month, you're going to get $5,000 a month in DI. And so what the client is seeing is 300 for 5,000, right? And they're like, I don't know, that doesn't really look, that seems expensive. What you should be doing, and I'm not saying you have to show them what the monthly benefit is, but if you show them what the total benefit is, if they become disabled and unable to work for 10 years, that's going to have a greater impact for that client, right? So you think about it, 5,000 a year, 5 times 12 is 60,000. 60,000 times 10 is 600,000. Now $300 a month for 600,000 of benefit, that's going to have more impact on that client than just showing that $5,000 a month. So make sure, the other thing, the other issue that I see a lot of times is that agents will just shoot the quote with not having that additional conversation, right? They get declined. The agent says, well, let me see what else I can find you. They go out, they get an impaired risk close, and they just send a quote with no other context or follow up, right? That's not going to help you either. So make sure anytime you're getting a lot of DI cost too much, make sure you look at how you're presenting it, make sure you're establishing that need, make sure you're reinforcing their total, lifetime earning potential, and then comparing, the what they're paying on a monthly basis to what their total benefit could be. That's going to have a lot more of an impact, right? I mean, that's how they do it in life insurance, right? It's, hey, you're going to pay, $60 a month, and if you die, you get $500,000 of life insurance, right? That's a better strategy than just showing the monthly benefit. Second, you own the price. The reason this is might be more expensive than what was originally sold is because we are taking on additional risk that the traditional carrier wouldn't. So why wouldn't it be more expensive, right? If you're high risk auto, you have a lot of accidents under your belt, you have a lot of speeding tickets on your record, right? It's going to cost more for that insurance than somebody that's never had a ticket, never been in a wreck. That's just the way that insurance works. And we are taking on some health issues that other carriers wouldn't. So it is probably going to cost more expensive than what was going to be sold. But what I often find is that the difference isn't that much compared to what was originally sold. And I was having some conversations with some Mass Mutual agents, and I said, just show me what you're typically selling, right? And they're, working in the physician market. They're selling, ONOC to age 67. They had a guaranteed insurability rider, residual rider, maybe uh, maybe one other rider, but I compared what they were selling to the healthy client to what, Flex DI would cost them. And I get it. It is not the same, right? It's guaranteed renewable. It's not ONOC. We don't have the guaranteed insurability option, but remember, they can't get that, right? But when you looked at what the premium was, we were only about, 8 to 10% more than what was originally sold. And so when you look at it that way, it's not really that much more expensive. And so you're talking $200 a month premium. Can you afford $220 a month? Right? It's not that far off when you look at what was originally sold to them. But when you do receive the objection, my recommendation is always to slow down. The first, reaction that most salespeople do when they say that, when that client says it's too expensive, they just go into a 7 minute, soapbox speech about why they're wrong, right? And that client's like, oh, just eyes glaze over, right? And so the first thing is slow down, collect your thoughts, and think of what the next words that are going to come out of your mouth are going to be, and it better be a question. Okay. It's not a time to go and say, hey, let me tell you why you're wrong. Come back with a question. A good one is, oh, what prompts you to say that? Right. Thanks for bringing that up. Obviously, price is something that's very important when selecting insurance. But let me ask, what prompted you to say that this DI policy is too expensive? And then dig, dig, dig. Right. You should probably have 3 to 5 more follow up questions to really get a firm understanding of why they think it's too expensive. Okay. If you do that, you're going to just, increase the likelihood of closing the sale. But after you have a firm grasp of why they think it's too expensive, come back and say, well, let me throw some ideas at you. And, there's really two things we can do here. We can either change the plan design or we can help them find the funds to purchase it. So, Amy, why don't you give us a couple of examples? I know you run a lot of quotes. What are some of the things we can change in the plan design to make it more affordable if someone thinks it's too expensive?
Well, of course, the first thing that you typically would look at is the benefit amount, right? We always say something small is better than nothing. So I would ask the client something like, "What do you pay for your, mortgage payment per month? What is your grocery bill? What is your, your utility bill, for example?" And so, based on those three things, we could always just bring the cost down to cover those specific things on the benefit amount instead of running, with the maximum monthly benefit that their income qualifies for. So that's the first thing we look at. We could also look at extending the elimination period. You actually save significantly if you use a 180-day EP versus doing a 90-day EP on the policy. And then, of course, you could look at shortening the benefit period. What I've heard statistically is that most folks who go on claim don't stay on claim for much longer than blue collar occupations typically 1 to 2 years, and then white collar occupations around 5 years. So instead of using that 7 year benefit period or that 10 year benefit period, we could offer a 3 year or 5 year benefit period.
Yeah. And that's one of the things we bring to the table is that if you come back to us and say, hey, this is too expensive, Amy or the rest of our quote team will help you design a plan that fits into the budget. So we always have that option. The other option that you could throw at them is, if I can help you find the funds, is there any additional reason why you wouldn't purchase this policy? And what I mean by this is if you can show them how you can help them find the funds to pay for this insurance without impacting their current lifestyle, they're going to be more likely to, buy the plan. Now, the first thing that I always say, and it's more of a consultative approach than just peddling a product, but it is to walk them through a budgeting process. And I know no one likes the B word, and you're trying to get them to protect their income, and now you're going to make them do a budget. A lot of insurance professionals aren't comfortable to do that, but if they're responsible, they're probably going to be open to it. I do this with my wife once or twice a year where I just sit down. I'm like, all right, we're going to look at our spendings. What are we wasting money on? And a lot of times we're cutting things that we can afford, but it's like we're not using them. And usually you can, find that maybe that 10% increase in premium that's going to have to do it. But a quick a quick example of my wife and I, first of all, we had two Amazon Prime accounts. I had one, she had one, right? That's $120 a year. That's not much, but that's, $10 a month. I had another app on my phone. I'm a big outdoors guy and I use an app called Onyx Hunt. It's a mapping app, but I had two of those that I was paying for somehow. So I canceled one of those. Flow Wrestling was another, app that I paid for or service that I paid for that I looked at. I'm like, I use this like once a year. Right. And so I liked helping them, but I decided it just wasn't worth it. And so you can always go through and I mean, that's just apps on my phone where I was, found $30 a month to save. Look at what other insurance they have, right? In terms of importance, disability insurance, in my opinion, ranks towards the top, right? And what you'll find is a lot of individuals will have some type of insurance through work, some type of work site product. And, I'll be candid, I used to work and sell those plans too. But the reality is they might be spending 20, $30 on an accident plan, that's going to pay them, $1,000 if they go to the ER. But what's more important, right? Protecting that $1,000, accident out of pocket if you have to go get stitches, or protecting 600,000 of your income if you become disabled, right? And so, having that consultative approach, saying, hey, do you have any other insurance that might be less of a priority than disability insurance? Well, let's get the DI, and then you can always start that at a later time. You have to let them make the decision, but you can educate them on it. And then the third way is, look at their PNC insurance. And if you don't do PNC, build a relationship with a PNC agent where you can refer business to. But, I find a lot of times if they haven't shopped their PNC for a while, a lot of times, if they go to a PNC agent, they shop it, they might get some savings there. Or just simply going from paying monthly to annual, we'll save them some funds as well. And so there's an endless number of ways that you can help them find funds to pay for this. But a lot of insurance professionals aren't willing to have that conversation, and they really should be having that conversation. So I think that impaired DI costs too much. It's just compared to what. But those are some tips on how to overcome it. And then let's jump in and talk about the final myth. Impaired DI underwriting is too hard. Probably when I started with risk, probably the thing that impressed me the most is is how streamlined our underwriting process is. So why don't you walk us through what the client can expect from underwriting perspective in the impaired DI market with Flex DI?
Yes, okay. And I'll be so bold as to say that underwriting with FSL you'll probably find to be the most easiest process that you'll ever experience when you compare that, especially with the underwriting process with traditional DI carriers. And
I
a
agree.
few a few bullet points I'd like to kind of pinpoint here is that we don't have a lengthy application. Our application is very short and to the point. We don't require exams with our apps. We also try to underwrite without having to pull APS records. And we also don't require a telephone interview. And so that being said, we also don't require financial verification for benefit amounts 3,000 or below. However, what also makes our process much simpler is that most of the GAs or brokers that we partner with and do business with and have been working with for a very long time, they usually submit cases even in the quoting phase, where clients have already been declined in the traditional DI space. And so these clients would have already gone through full underwriting. They completed a lengthy application with the traditional DI carrier. They went through exams, APS records were pulled by the carrier. And then, of course, after reviewing, the carrier would have, if they've declined the case, they would have put a very detailed note together that they sent to the client on the reason for the decline. So when our GAs submit, quote requests to us, we already have all of this information, of course, along with a HIPAA form that is signed by the client. And that gives us access to the information that has already been established by the traditional DI carrier, and that is submitted to us in the quoting phase. And so this allows us to run accurate quotes. And those quotes are usually reviewed by our underwriters because they are in-house, especially for the more complicated cases that that come through our door. If it's someone with just diabetes on its own, no other medical conditions, or maybe a mild cancer, it's easy for us, the sales team, to just put a quote together, and we're very confident that that offer will not change when an application is submitted. But with the more complicated cases, we do sit with our underwriters in-house, discuss the case, and then put the quote together, and the correspondence goes out to the field. And should they submit an application, we already have a lot of this information on file. And so our underwriting process takes 30 days, in most cases, less than 30 days. The only things that can kind of cause a hang up or to make it go longer is if we do absolutely need to pull APSs. And, in cases where this client perhaps went through a GA and the GA told them that they would be declined without actually submitting an app to a traditional DI carrier. And so APSs weren't pulled there. Just limited information where we do absolutely need to get those APS records that can sometimes take longer. Or maybe a client and an agent didn't complete our application fully, and then we need information back from them that slows down the process. But even with that being said, we try to underwrite within 30 days. If a case has been in-house for 30 days, our underwriters would do peer reviews and they would try to make an offer based on the information that we already have so that we can approve the case and it can go to the client. Now, with those types of situations, of course, we may give a much more restricted offer where if we were trying to avoid an exclusion, we would do a 180-day EP versus a 90-day and so on and so forth, or we could raise the premium rate, right? But our underwriters are also open then once a policy is placed, if a client can submit current, medical records, should they want an exclusion removed, our underwriters are happy to do that once a policy is placed as well. So all in all, our process is a very easy and streamlined, like Seth said.
Yeah, and that last bullet point there, communicate, communicate, communicate,
Hmm.
communicate with that client what they're going to have to do. They're going to have to, answer questions about their health. They're going to have to provide financial information, and then communicate with the underwriter, right? When they need additional clarifying information, the quicker you can get that, and the more information you can provide, the faster this is going to go. So with that, Amy, we are at 40 minutes of the presentation. Hopefully, we've busted the myths and gave you some tips to overcome those common objections. If you have a quote request, feel free to send it to quotes@usriskinsure.com, and we'll get that out to you as soon as possible. Amy, one concluding thought for the audience before we wrap it up today.
Yeah, and I think more than giving a tip, I kind of just want to put a challenge out there to all the folks on the call with us. We are very aware that presenting impaired risk products that have graded benefits and, it's seen as having much higher premiums compared to traditional DI coverage. It can be challenging. We know that. But I would be so bold as to say it really isn't challenging if you don't overthink it. We know that clients have already gone through a tedious underwriting process, and they're disappointed when they get declined by traditional DI carriers. And it's not easy for agents to then convince these clients that after being declined, the need for disability insurance still exists, right? It can be uncomfortable, and most of us dislike being uncomfortable and outside of our comfort zones. But I would like to challenge you to do the uncomfortable thing and push through and convince these clients that income replacement is very important. Don't just offer it to your healthy clients. Your impaired risk clients are more likely to become disabled way before your healthy clients do. So, in many respects, they do need it more. And on top of that, they do need more comprehensive coverage that may cover their pre existing conditions. And you want to give them a policy that has level premiums and not a policy that's term based where they have to renew the application every 3 to 5 years. And then they're faced with that tedious underwriting process again. And our Flex DI is a solution for them.
Yep, very, very well said. And I'll piggyback on it. If you've never placed an impaired DI policy before, I always tell agents, don't let your first app discourage you from doing it again. I think that a lot of agents they'll do one and it won't go great. And maybe it's us, maybe it's them, maybe it's the client. I don't know. But the more you do it, the better you get at it and the better you'll get at presenting it, right? That the first time you present impaired product, you might get all four of those objections right from the client, But the more you have that conversation, the more you're going to address them before they come up, and the better you're going to be prepared to address them when they do come up. So, it's a process. The fifth time you present an impaired case, you're going to be a lot better than the first time. So never get discouraged if that first one doesn't go well. And if you ever need any tips, reach out to Amy, reach out to me, reach out to anyone on our sales team, and we're happy to coach you up on the right things to say, the wrong things to say, and focusing on what's important. So thanks everyone for joining today's call. I will send everyone a copy of today's presentation, and if you have any questions, feel free to email me or give me a call on my cell phone. Thanks everyone, and talk
Thanks,
to you all
everyone.
soon.
Bye.